All right. We live for a little Wednesday market meltdown. This is like the second wave in such a short period of time. And so I couldn't help myself. So I thought I would log on. I was actually preparing some stuff for tomorrow. And all of a sudden, look at the charts and voila, another drawdown. Gold, silver, cryptos, you name it. So I'm wondering how far does this go? And will it continue into tomorrow morning when markets open? That is something we're going to pay attention to. But as always, appreciate you guys for blessing me with your presence, doing a little bit of a little late night live stream. It's been a minute, but for those who are checking us out, definitely make sure you hit that subscription button if you happen to be coming across this for the first time, and then click the bell and hit all so you'll be notified, and then leave a comment, share thoughts, ideas, suggestions in the chat, in the comment section, whatever you're watching this from. And so my goal tonight is just to look at some chart action, give some thoughts, ideas, and just basically look ahead as to the amount of turbulence and volatility that we obviously must face before everything is flushed out, cleansed out, before we surge to that $1,000 silver range that I am very confident about, given all the things that's happening and everything in between, and the fact that now we have a critical mineral project vault, and that's another thing. So I got a lot of thoughts about that. How can you have Project Vault when our government can't verify that there's gold in Fort Knox as well as gold that belongs to the U.S. in New York? Just things that make a person wonder. But as always, for those who are checking in, man, appreciate you for blessing with your time, your presence. Let me acknowledge a couple people. We got LBP checking in. We got Young checking in. We got Will Smith, if I'm not saying that anyway. We got Samuel. Appreciate you. James checking in. Todd, appreciate you, man. Rev, yeah, I'm gonna butcher that, but I'm curious to get your thoughts. So feel free, man. Let me know, what you're thinking, what you're seeing. I might need to open up the lines a little bit just to get some different opinions on this matter. And we're gonna just jump right into the chart. So let me just not waste any time. Okay, so look at this action here. So I want to just walk through this. And once again, when I see this, because I believe I know what time it is, it kind of excites me a little bit. Just because, as I mentioned before, like in order to get to where we have to go, we got to go through a lot of uncertainty, because on the back end of things, clearly there's a lot of issues when it comes to actual physical metals. And I've seen two reports, and I'm going to bring them up if I can find them. But Clive Thompson mentioned something about in one of his videos that his connect from Switzerland said that they're lacking silver in the vaults. And then I saw another post about there being no silver available in another area. So if it is true that silver is running dry, then expect more paper pushing methods to frighten people, to make it appear as if like this is just a market that you don't want to participate in. Stay away from gold and silver because it's too volatile. But then once again, it's one of the things where once you get it in your hands, I don't feel threatened at all. I don't feel any sense of nerve unwinding or reckoning in my spirit, man. But okay, so let's just walk through this. I want to just take my time on this one. Feel free to chime in, man. I'm gonna check in with the chat, and we're gonna just walk ourselves through this type of action here. So I'm gonna shrink myself, and let's just walk through this, because the goal is to, you never know who might be new. If you're a newbie to this, meaning that you're just coming across monetary literacy, you're just understanding what's going on, it can frighten a lot of people when you see these types of ebbs and flows. Like literally, one day we're on a roller coaster going up, you're all excited, and then when you're coming down, you're just a little uneasy. And so we're going to walk through this. So let's just go back 5 days. Let's go back a week. We got to touch last week. Better yet, make it a month. Let's not play no game. So this is a month right here, and just silver. This pretty much only thing I really care about at this current moment is silver reaching the number that it has to reach. So just let's make some sense of this. $71 went up to 79, back down to 71. So think about that. That's $8. This is $8. Towards the December time frame. Then we got up to 77, and on December 30th, came down the 31st to 71, surged back up to 80, 96, came down to 75, shot up to 92.41 on January 15th, came down to 90, got up to 94-ish, and then here we are now, 77. So based upon that type of activity, if I was playing in a papers game or playing in any other thing other than physical, if I was even playing with ETFs, because I'm really concerned with the ETFs, my good people, because if there's physical silver in vaults somewhere, you better believe the people, the powers that be, will definitely try to use some of that available silver in vaults to try to shore up some things on their back end. Because if it's literally, a scramble to get physical right now, what would make you think that the parties that's responsible for that silver won't allow some of it to sneak out late at night, and then on the books and on the computer screen it still says, we still have 100 million ounces, but 25 million went out the back door at midnight type of activity. In the midst of a reset, consider nothing off the table. Nothing's off the table. Okay, let's go to some other charts. So here we have now, just checking into another chart here. And what I find to be the most interesting is that according to this metals chart right here, as you can see, let me get on the screen here. As you can see, all this activity is happening right now. And so literally, I watched this adjust from 82 is 82. Both of these numbers said 82. And then, of course, the one to the other side of the screen adjusted to 77. And we're still here in the futures at 82. And if I'm not mistaken, this is where I get kind of confused myself, because it says the COMEX is open, LBMA is closed, Shanghai Futures Exchange is open, and the Shanghai Gold Exchange is open, and the MCX out of India is closed. And so I'm assuming this has to be international market itself, because if futures are still $82 right here, it hasn't caught up yet. So the fact that it's corrected over here at 77 at the US spot price, these are things that I would consider to be anomalies. But if anybody has a valid explanation for what we're witnessing, feel free to let me know in the chat. And we go from there. And so what I want to basically touch on during this live stream is just, play through some scenarios here. So here we have, what I consider a late night market slam. And even it's not just gold and silver. Of course, we got crypto is also taking a little bit of a beating, a little bit of a thrashing. And so literally, I was looking at the different projects here and looking at the market cap. That's what I pay attention to, because literally this is where you got extra funds sitting around where it can be liquidated easier to shore up any margin calls on the back end for any hedge funds or any players that's dealing in a paper game that's still having some issues. Because literally we're experiencing a liquidity trap, because there's nowhere near enough liquidity to meet obligations of any kind, whether it be service and debt. And that's why I'm going to share some thoughts about what's coming from our government, and the fact that you can rest assured that there's going to be a lot of easing coming from the US government. And then you got that 1.2 trillion that was just signed yesterday by the president. So that's going to make its way into wherever it has to go. And so M2 is going to surge higher, stronger, faster. But in the meantime, until we get to that point, because something has to break. Right now, we're witnessing a drawdown, a little bit of a, deleveraging in a lot of areas. There's so many complex, intricate details of this piping. And then you factor in the crypto space, because once again, I think this is still associated with the stock market. And I'm seeing more and more people talking about, the PE ratios of stocks being way overpriced, and there need to be a correction. So lots of things will come tumbling down. But one thing that's different about stocks coming down, digital assets coming down, is that they're all on a screen. They're all based upon numbers on a screen. There's nothing tangible, nothing physical about those assets. But then again, when it comes to gold and silver, you rest assured it's a different feeling having something in your hand rather than just looking at something on a screen. And that's the separation between this reset, the tangible and intangible, digital distractions and the tangible physical realm that they're trying to divert our attention from. And so let me just, I see a question. I see some here. It says, why stop buying if we think it's going to 250 to 200 or 500 somewhere? So be rad. I don't know. I don't know if you're commenting on somebody's question or something like that, but I think it's going to boil down to, for the average person, depending on your financial situation, because we're just looking at the market activity based upon spot price on a screen is given it to us in real time as things unfold. The average Joe and Jane, the mainstream economy is not doing well right now. Labor market's not doing right now. I just posted stuff here out of Metro Detroit. Big Three is not doing all that good right now. So a lot of people are not really even thinking about investing. And when it comes to gold and silver, I don't even consider that investing, because you don't technically, if you look at it from a monetary literacy standpoint, you technically don't buy gold and silver. You simply redeem debt IOU notes. So you take, 100 of these pieces of paper, go to your coin shop, go online, and you just return the sender, metaphorically speaking, and then you receive something. And this is what you consider to be money. And it is a true store of value and wealth preservation. Everything else are counterparty risks. Anything that can be like printed and created on a ledger that somebody else owns, you got to think about all the counterparty risks, all the intermediaries between the promise that you think you have at the end and the day you had made your investment. Like you put how much to take out on your check and go into your 401k. You look at the stock market along the way, and then when it's time to retire 10, 20, 30 years from now, let's see what's going to be. We'll see what's going to be there, and what type of purchasing power will it have. That's a lot of time, a lot of risk. But then again, in the physical, tangible world, when it comes to real assets, in particular land, water, food, stuff that we really need, it just gives a different vibe. But the point is, $200, $500, the average Joe may not feel comfortable for the first time going out and buying one silver coin for 100, given that most people don't have savings. Nevertheless, the ability to go out and drop something substantial. And this is where it gets to the point of fractional silver. And so getting a half an ounce, a tenth, U.S. coinage, junk silver, whatever you can get a hold of, anything that has real tangible chemical elements to them that's needed for humanity's sake, industrial need, monetary need, medical, science, everything in between, will do a person justice. So don't be discouraged. That's like in the cryptos community, especially in the Bitcoin, people be like, oh, you can't afford one Bitcoin. They'd be like, just get some Satoshis. What's the silver version? Fractional, just get some junk silver. You know what I'm saying? That type of thing. Anyway, it's just long-winded. Alexander, 100%. 100%. I share this on social media. Mind you, I try to keep my eyes on the pulse of everything, especially when it comes to everything centered around this Federal Reserve note here, because it's hard to compile all the information and data that's happening in real time without without losing your damn mind. And so even I myself have to unplug, and that's why I try to keep myself busy with a variety of projects that I enjoy working on, not related to this subject matter. But to your point, let me share with you the graphic, or not the graphic, but the chart I pulled up, and then we'll get into some more things as well. I don't want to just rant forever, but this is just stuff that's happening in real time that, once again, so this is 4,500 this day, and on the same day I posted one or two other things that all equaled up to thousands. Let me see if I can grab another one. Just to keep people up to date, let me get this one here. So these are just headlines that don't fit the narrative. The narrative that we're being sold is, oh, economy is great. Things are going to, and mind you, Bessie was like, tax refund time. Everybody will get a bigger refund check. Everybody going to feel the American, whatever they call it. But here's another one. This came out last week. Amazon confirms 16,000 job cuts after an accidental email. So mind you, my point is 16,000 here, 4,500. That's 20,000 right there within a 7-day time period. I can go to a page where I show you thousands of more. Think about that. So those thousands of people there, they're not thinking about silver. They're not thinking about getting no gold because they like, I don't know how I'm gonna pay my rent. I don't know I'm gonna pay this, pay that. So for those individuals, you know, that's the retail side of things that haven't even really found out yet what's going on. And so to think that silver right now is supposed to be, whatever they're trying to tell us is it's laughable. It's it's a joke. And so, mind you, all this activity we're seeing, this is all in a paper game, all in a paper game because does not reflect true nature of the physical world. And so, to better point at what I'm trying to get to, give me a second. Let me get to some information uh, that I wanted to touch on. I bookmarked a couple of things here that plays into the narrative that despite the spot price, pay attention to the information coming out about vaults being empty. And here's one right here. And so this is from Silver Trade earlier today. It says silver shortage hits Dubai. Buyers paying 15% premium for physical. It says silver is not available in the market right now. Physical stock is exhausted. Does this look like like a bull market that ended last week? So once again, this is a play on the idea that we got to 120, and on Friday it got slammed down, and it started the week off a little sluggish. Started to recover within a couple of hours ago. It hit 90, mind you, it hit 90 earlier today, and here we are now 76. So once again, if vaults in several places are running low, how exactly are they coming to that price? We know it's a paper charades. Joseph says silver drops by oops, give me a second. Silver drops by over 10% again. No circuit breakers are triggered. Yeah, so that's a good point there. And one of the videos I did a couple days ago talked about from the COMEX, and literally it was it was the beginning of January. The COMEX changed the verbiage of how all that type of stuff works, basically implying that when stuff hits the fan or they know it's going to hit the fan, they just change the rules of the game. Mind you, to them, this is all a game. And if they control the boundaries as well as the ebbs and flow of the game, they also write the rules. And so when it comes to the circuit breaker situation, from what I read and thumbed through, it mentioned about the circuit breakers being triggered more so when it's going up fast because of them being concerned of shorts being liquidated or longs being liquidated, I think, or something like that. No, shorts being liquidated, and or if the market activity impacts other markets, preferably the equities. And if equities ain't having problems, then they not really concerned directly on what's happening. But then again, they're intentionally doing this. And this is where you get into the legality of it, because the CFTC was created. The Commodity Futures, whatever, I can't think of it right now, was created to oversee activity like this, to keep things in right standing on behalf of investors. So literally, when you see all this volatility, you have the average Joe and Jane, the retail person, making decisions upon this activity. They're losing money because the banks on the back end are controlling this. They're positioning before the retail has a chance to adjust to any of this volatility. So you better believe the banks are getting wealthier as a result of this. And let me share something else with you real quick. Give me a second. I hope I bookmark it. It was something in reference to here's another little tab that I want to share about vaults and how silver is being depleted from vaults in real time. So this is something that came out earlier or yesterday-ish, but once again, I just take it, grab it, and I, you know, r- I researched it roughly, and it came back from Grok as being somewhat accurate. Numbers, little, just these numbers here are older, so the new numbers are more. But it says Shanghai silver stocks dip. Physical supply falls to 449 million tons. It says Shanghai Futures Exchange physical silver holding drops by 462 tons to 449. Says a shrinking supply signals tighter market conditions and potential upward pressure on silver prices. So here's the real thing. So this is the second headline or caption that I talked about when it comes to shortage. If Dubai vaults is running low, Shanghai is being drained. That's just two. Think about this. There's many other players, many other nation states with exchanges that have vaults that's supposed to be supplying silver when needed. And if they're all being drained because demand is so high of people wanting to get out of paper and get into physical, wouldn't that really truly indicate a price going up and not down? And that's how you know all this stuff we see on the screen when markets are slammed down is not real. But that's not it. That's not even what I wanted to show you. Let me see. I didn't bookmark it. But let me see if I can find it. It was about JP Morgan, and somebody posted some screenshot activity about how Jamie Dimon right now is just having a good old time because they are laughing all the way to the bank, literally. The physical vault. Where I can't find it. But anyway, the person posted something saying something about it was the actual copy of the printout from vault activity showing how like JP Morgan more so front running all this volatility. They are the beneficiaries because they're also the ones draining the vaults, adding to their personal stockpile at much cheaper prices because they're liquidating their little bit of shorts. So these dips here, these dips allow the big players to shore up physical on their side at that price. But then again, the price we look at is not the same. So a good way of looking at it is I look at the coin shops right now, and literally here's something that just changed. And so here we have $77 on SD bullion, $77. And before I refresh this page, I look at the very last dollar amount, and it's 90. It was 90 just a moment ago. It said 80. Is the 80? No, it said 85, I think. But these prices are changing faster, and what I believe they're doing is they're simply adjusting their premiums. So if it's 77 right now, it's 90 here. What is that? According to using your card or PayPal to check out if you want to buy right now, call yourself buying a dip. Let me go ahead and try to 1,000 ounces right quick while the prices are slammed down. And then you go on the screen, and once again, they just bumped the premium. So the premium went up. It was $87 a moment ago. It was $87 a moment ago. And so that was $3 within 20 minutes of me getting online. So it's good to say it's $13 now ish. Like I always say, silver price is whatever you have to pay when you check out online. And here's the problem with that. When you order online now, because you have now the everything clearing on the back end, and then you're going to have concerns of will the actual dealer feel comfortable sending out your order if, say, tomorrow the price shoots up back to 95. So literally, honoring their business model and ethic way of doing business will be problematic, because it's good to say if someone tried to buy that dip for a large amount that they may not ship it in time and say, oh, oops, we gonna cancel your order, or due to this, whatever, we hold the right to cancel your order, and please feel free to reorder again. And then you go back on the screen trying to order 1,000. Now that 1,000 is just shot up, $10 or $5 per ounce you tried to buy. This is the type of things we're going to get into. So buying online pretty soon may not be like, something that you can really trust, depending on the company's ability to source inventory to meet demand. Because as I've just showed you already, if silver's draining the vaults, it's good to say most people will not feel comfortable letting go of their silver at $100, $120, especially when you know what time it is, you know what's going on. Would you really want to let it go? Unless, of course, everybody's situation different. People got, 2, 3, 4, 5 vaults. So you got, you got, 2 tons yourself. I understand you could let off some, but the average Joe and Jane who's using this as a wealth preservation as well as a liquidity tool for after the reset, you may not want to let it go. And so you better believe the big players, those that got high net worth individuals that are probably still coming to get silver, those are the ones that, they're not gonna let it go for $100, 150. And that's my motto is like, let's try to wait and go through all this, the calm before the storm, sort of say, and let's get to 3, 4, 500. Then we have a much different conversation at that point. And then, of course, once we get into that territory, I'm sure it'd be a lot easier to believe my future price prediction of 1,000, just to get the conversation started, like to really start talking, to really feel like we meaning people who have been paying attention and doing, you know, prudent financial in investing forever when it comes to tangible metals, then you feel a little bit more comfortable in the fact that, hey, you've reaped the rewards of patience, research, due diligence, and everything in between. Okay. So another thing came to mind. I want to share with you guys because I was literally going to, I'm going to do a video. Um, Let me see if I can find it. I want to talk about something that I came across the other day. Let me see if I can find it. I found it to be interesting. Okay, here we go. Here we go. Let me give you this. So this is an article I'm sure you haven't seen. I'm sure you haven't seen this. Uncle Buffett. Uncle Buffett. Uncle Buffett's sitting on the largest cash stockpile, and for the most part in human history. I forgot what a stockpile is, but he's sitting heavy. He's stepped down from the board. He's left his proteges in charge. They have a mandate as to what they're all in sync on doing. And as I said before, sitting on, was it? I think about half a trillion now. I don't know what he's sitting on, but literally when it's all said and done, he's going to deploy that cash into something. And I believe he's going to buy up cities, blocks, even buy a little country or two to secure tangible wealth. He's going to buy tangible items when stuff hit the fan. But in this article here, this came out last week, and it's interesting because I wasn't aware that Berkshire Hathaway has a nice stockpile of silver that they bought decades ago that has done quite well. But yeah, they don't talk about gold and silver like that publicly. They talk about stocks because that's what they buy, assets in reference to companies that pay dividends or just having direct ownership of those companies. But I'll give you some of this because I thought this was interesting. And once again, the amount of silver that they're reported to have on their balance sheet is so much that even if their stockpile of cash, let me see here what their Berkshire cash. I'm going somewhere with this. Bear with me. Okay, okay. Let me give you Berkshire Hathaway's cash pile. So as of right now, Berkshire Hathaway is sitting on $344 billion as of this past summer. Okay. So hear me out here. They're sitting on 344 billion denominated in these. All of that, for the most part, is invested in U.S. liabilities, government bonds. So they're literally lending money to the government and getting interest on that 344 plus some right now. And so 344 billion is a lot. And if something goes wrong, if something gets out of whack to where they're not able to access that 344, or like inflation, or God forbid, hyperinflation erodes away the purchasing power of that 344 to where they can't really buy much with that 344. They have a quasi insurance policy on that 344. And what do I mean? Here we go back to this article here. And so I'll run through it quickly. This came out January 30th. The Street says Warren Buffett's surprising investing preference: silver, not gold. And so I'll give you the gist of things here. And it says here, Warren Buffett criticizes gold. Criticizes gold as neither of much use or procreative and prefers productive assets. It says silver's industrial demand is surging, whatever, whatever. It says investor advice: use gold as insure. Oh, I hate when I do that. Use gold as insurance, but consider silver for growth. So the statement right above my head here is one of the caveats that was pulled from studying Warren Buffett based upon some comments he's made. And in particular, goes back here to 2011 appearance on Squawk Box when he was talking about gold going long on fear. And so let me get to the bottom of this. And so here is something that says the silver trade that keeps getting more interesting. So this is where it gets interesting. It says Berkshire Hathaway disclosed in February 1998 press release that it owned 129 million ounces of silver, which purchases starting on July 25th, 1997, and ending on January 12th, 1998. The company said that even though the stake was huge in ounces, it represented less than 2% of Berkshire's investment portfolio at the time. So, barring something having changed, Berkshire Hathaway was smart enough to have purchased 129 million ounces back in the late 90s. It's good to say he's sitting on that, or they could have sold it. But I would be very surprised if they sold it, because this gets into that whole idea of having an insurance policy. And so with $344 billion sitting in the government's coffers, growing, not really growing, net inflation, negative, but 344 exposure to U.S. liabilities and debt, but having potentially 129 million ounces that was purchased in 1997, 1998. So for that 6 month, that's a 6 month time frame. They purchased 129 million. So if they're still sitting on 129 million, let's just do some math on that. So now if we go back and just look at their average purchase price. So we go back to 20 years ago ish. Let me see if I get here. Nope. Go back 30. So we got to go back 30 years. If we go back 30 years to July, so we got July 97. So in July of 97, when he started purchasing, as you can see on the screen here, if you can see it, let me know. In July of 97, let me zoom in. Berkshire Hathaway paid $4.34 plus the premium, whatever. But it was $4 an ounce. They bought 129 million ounces. Somebody do the math for me real quick. Let me know in the chat. I'm taking it at that's 400. That's 400. 400. Somebody do the math. Okay, just say $400 million right there. $400 million. Just say make it even $500 million is what was spent to acquire 129 million ounces. Now, $500 million of silver in 1998, because they literally bought for 6 months. This right here. So they end it right here. So his last purchase was $6.24. So 434 to 624 is what 129 million on Berkshire's balance sheet looks like. Now you go into the future, and that's the thing. Like he could have liquidated back in 2011 when we got $40 to $50 depending on where you look at it. But knowing Uncle Buffett, thinking long term, my thought would be, why not hold on to that 129 million till we get to where it truly will go. And as you can see, where we just touched, having touched 120. So think about this. $500 million ish purchased 1997, 97, 97, 98, that's 6 months. 129 million, 129 million ounces. Now come to today and just look at whatever the price is right now. 77. What is it? What's today? What's the price right now? $76. So do the math on Uncle Buffett's accumulation and what he's actually secured in real wealth that transcends market activity, manipulation, futures, government debt, and having 129 million, if he can keep a hold of it, and if the government don't confiscate it, or he's forced to sell it to the government as a part of the strategic stockpile or something. Think about that. So 76 times 129, 76 times 129 million puts us in the what puts us in a seven to say 7.6, 7.7 billion dollars. So think about Uncle Buffett's investment. So going back to this investment that Berkshire made of 129 million ounces between a 6-month time frame, average price $4 or $6. Fast forward, 30 years later, more than 30 years later, that's 7 point something, to say $7 billion. My math could be off, give or take. Somebody says 9.8 billion. Silver Sailor, appreciate you. So that's 9.8 billion. And so here we are now. Uncle Buffett is insured. He's self-insured with real tangible wealth. My whole point is, for those who are awake and aware and realize what's going on, dealing with paper, dealing with futures, dealing with contracts, dealing with digital stuff, whatever, all stuff on screen, it's fun. And as Buffett mentioned, gold is for basically wealth preservation. Silver is for growth. Having silver, whatever amount you have, small or great, can help you throughout time because silver will grow because the currency will be debased, and silver acts like a supernatural, I'm gonna just use the word divine sponge that will absorb all that liquidity that's current. So literally, we haven't reached any type of scary hyperinflationary type of environment. It was just higher inflation. But Buffett has appreciated from $500 million investment to 9.8, according to Silver Sailor. So that is a nice little bit appreciated. That's nice growth, as mentioned. And he didn't do nothing but just got in at the right time. So getting in at the right time, sitting on the sideline, doing whatever else you do, speculating, whatever, having fun, living, loving, laugh, and everything else. When you come back to your insurance policy against your own government, nominally speaking, you're going to do well. And then whatever environment we're in at that moment where you need to use some of that purchasing power, potential purchasing power, you're going to be better off than having a bag of currency or solely just digits on a screen, or for that matter, pricing silver according to what we're being told from those that we know are not operating in our best interest. And so those individuals are the ones that's controlling what we're witnessing now. So, hypothetically speaking, when we get to that $1,000 per ounce silver figure that I believe is sooner than later, think about Uncle Buffett's stack. So Silver Sailor, do the math for me. Do that 129. Do all the math needed. Now put silver at $1,000 per ounce and let me know what Uncle Buffett will be sitting on. And mind you, as they said, where to go. Having the 129 million ounces. Let me get it back down here. It says here, it won't let me do it. I was going to highlight, but as it says here, having $129 million is less than 2% of his overall balance sheet. So think about this. Hypothetically saying, if he has 2% in silver, we saw the growth from 500 million initial investment to 9.8 billion ish now, and its silver's at $77? You mean to tell me you think they're gonna let that go willingly? Government might come in and take it, but we'll wait and see. But imagine when it gets to 1,000. Oh, no, you didn't. Silver Sailor, no, you didn't. 129 billion. And so that's so 129 billion with that stockpile at $1,000 an ounce. That definitely puts him in a very near close to self-insurance type of way, given that I start off by saying that he has roughly 344 billion in cash. So literally that 2% investment 30 plus years ago has helped him cover his rear end, his company's rear end, his legacy by helping hedge against this 344. So having that 129 potentially, if it reaches $1,000 per ounce, he won't lose all of his life's fortune from a paper collapse, a hyperinflation, or whatever comes about in the future we don't know about. He'll still have something to buy cities, buy a country or two, buy some governments, type of access. And so that is the power of being positioned in something that the world needs. It's in short supply. The world's clamoring to get a hold of it however they can, and they can't bring it out the ground fast enough. Then this goes to my next point from the short I just did a minute ago. Here we have Cousin Vance. We'll call him Cousin Vance. I don't like the, I don't particularly care for my cousin. I'm gonna pray for my cousin. Vance pitches price floor for key minerals to counter China. So think about this. We all in a race to secure real world wealth because elements from the periodic table is what God has given to man for man to have dominion over the earth. And between that time and now, as you can witness, Satan has done a good job of hijacking humanity and having us thinking that what we see on the screen in the form of ones and zeros and computer code is real wealth, when actually it's just claims of currency units. And they're trying to tell us that they're going to literally have a mineral race, silver race war with China. And we don't even know what they got in their vaults. We don't know what they got in their vaults. And for sure, the World Gold Council has no clue either. And the fact that they call this Project Vault, that's the part that really is spooky. You got Project Vault, where they're supposed to work with other nations and help in securing minerals and stuff like that. And it's like, come on, buddy. We haven't got an audit of Fort Wayne, and we don't know what's in New York. So we don't know if the American people actually have gold. You telling us that we're supposed to believe that you're going to provide 12 billion and work along with other nations? So give you a little update for those who may not be aware. It says U.S. and EU have committed to concluding a memorandum of understanding with the next 30 days aiming at boosting critical mineral supply chain security. So mineral supply chain security, which silver amongst many other things included in there. And we're supposed to go full steam ahead. It says its comments built on Donald Trump's Monday announcement plans for nearly 12 billion critical mineral stockpile in his latest effort to aid U.S. manufacturers. So we got all the same manufacturers that I just showed you are laying off. And we're supposed to believe that this is going to really help manufacturing. If you don't have a purchaser or consumer, if people are tapped out, we're going to definitely need some UBI. But it says here, what this administration has called Project Vault. And that's where these play on words, boy, these play on words have you thinking that it's going to be all gravy at the end of the day. Think about all the bills, pieces of legislation, one big, beautiful bill, Save America Act. I'm curious. I'm curious. Give me a second. I got to find this out. This is for laugh and giggles. I want to look at the name. Because I want to read some of these names, and I want you to let me know how has those bills actually worked out as far as what they were called and what they accomplished. Let me see here. Can't get all the bills names. Shoot, y'all remember the American Recovery Act, and somebody let me know some bills. Some of them bills. I mean, so Trump signed 3 of them, or 2 of 'em, 2 or 3. Biden got 1 or 2. That's about 5 bills, 3 or 4 or 5 bills, pieces of legislation that was sold to the American public as being like a way to recover. We're gonna get back to, whatever. But I'm drawing a blank, but I talked about them years ago, so I got them all in the catalog. But somebody give me some names of some pieces of legislation that came out with the stimmy checks and all the other stuff. I'm curious. It's just anyway. Um, so yeah, that's just interesting to me. I find that very funny. So for those that are just coming in, live streaming, just thought I would, connect, share my 2 cents on how don't pay attention to any of what you're seeing on the screen directly. It's a futures papers game. It's not a physical. I showed 2 real life scenarios of Dubai and what was the other one? Another country, all experiencing short Shanghai, all experiencing severe drawdown of their vaults on silver. So when you see 77, it's like, come on now, like, we know that's not for us, that's for the bankers. And so literally right now to see 76.82 is like, if you log on anywhere to go, like right now, go try to buy something, like you're gonna pay $90.52 unless you're gonna buy bulk. And then the problem with going down here to get is, so if somebody try right now to buy 1,500 plus ounces, more likely a wire, to pay 83, that'd be great. But then again, it's like between the time you make the transaction and check out, you get an email confirmation saying your order has been processed. We'll update you when your metal is ready for delivery. Order in bulk like that, 1,500 plus ounces, depending on what the dealer you're going with, they may not have it the way they would want to get rid of it at 83. So say tomorrow the Crimex opens. We're gonna find out in less than 12 hours. We're gonna get a good idea to where things are heading. But say for tomorrow, the price recovers. My projection, my thought would be that based upon what we're seeing here, this is all being led by the Asian region. This is literally an Asian contagion, more than likely. And it's good to say it's going to spill over into Europe and then to America. And it's 76 right now. So if this is a cleaning out of futures, trying to shore up all the people, all the institutions, all the people that's short, trying to just get them out the game, and then the big players, J.P. Morgan, taking delivery of whatever they can get a hold of themselves to add to their 400 million ounces, if I'm not mistaken. They're paying this price ish for delivery if they can get it. But your average Joe and Jane, the retail person, you and I, we ain't paying that. So it's an illusion. It's fool's gold. And this, gold is another way. I mean, gold, I'm not talking about gold now because that's the wealth of kings. I'm concerned with my people in the community, those that, are trying to protect and preserve themselves. So for those that come in late, I laid out the whole case as to why Berkshire Hathaway and Warren Buffett has reassured his stockpile of cash with a minimum purchase, and the amount that he's appreciated in nominal terms is mind-blowing. So check that out if you haven't seen it. But what we see here on the screen is fool's gold. Digital distractions of nothingness because it's paper. And let me go. I did an interview last week, and I wanted to talk about, so here, this is interesting here, this little narrative here. US debt clock. So let me get out of here if I can. And I want to share with you just some more realistic figures. How can I get out of here? They make it so hard to exit. Shoot. I can't even get out of this. But I want to show you something in its corner, so I'll go to it anyway. Okay. If you see, so this is a problem. This is the biggest problem with all this future stuff, the paper game. As you can see on the screen here, if it's 377 paper ounces to one physical, There's been an abundance of paper created over the last how many ever years. So there's no way that can be unwound evenly or in orderly fashion. So it has to be chaotic. And what we're witnessing right now with Asia, Europe, and the US all in the same boat of having to deal with the US's creation of all those fake 377 per 1 ounce tangible silver ounces. That is the unraveling because literally there's nothing there but IOU promises. And when IOU promises blow up and go kapoof, there's losses, there's margin calls, there's liquidity squeezes, there's companies that may go out of business if they don't find cash to cover their rear ends. So in order to cover your rear end, you got to go sell some other things. And what's the easiest thing to sell right now is right here on the screen. And so this goes to my potential Bitcoin analysis because Bitcoin will succeed when all of this smoke blows over because our government wants it to succeed. In this administration, he wouldn't let Eric and Donald Trump Jr. get involved in the crypto space and to leave his kids high and dry. So worst case scenario, he gonna give us one last pump so his kids can exit if it's about that. But here's my point. Looking at this current price, this is the last month's activity. Literally, people taking profit, A, and B, you got the greatest liabilities, the greatest counterparty risk to Bitcoin happen to be the very same products that's built on top of this particular asset. It's treasury companies and ETFs. Those two, there's 150-ish treasury companies. Their sole purpose is to accumulate Bitcoin on their balance sheet, and then they're following the Sailor strategy of creating 4 or 5 debt instruments to borrow cheaply to buy more Bitcoin. And once again, majority of those companies outside of Sailor can't afford to lose, or they're gonna have to do what? Sell. So there's gonna be more Bitcoin selling pretty soon, and then that's gonna spook the ETFs because the ETFs are actual retail investors that have Bitcoin exposure in their 401ks and all types of investment vehicles. They're going to get spooked because they probably got in high. So looking at the current market cap, it's, right now we're looking at Bitcoin's market cap is 1.44 trillion, down from 192 just a month ago. That's 500 billion gone in a very short time frame. And once again, it's my thought and my expectation that from a market cap standpoint, because of liquidity squeeze, because of silver, gold causing issues for those that had exposure to that, they're going to go to the next best thing where they can go and get it the fastest, which is cash out of their Bitcoin treasuries. So Bitcoin will drop below $1 trillion unless something crashes, something burning, and the economy smelling smoke. And Jerome Powell changed his stance. He has 2 potential meetings before, or 2 chances to cut before he's out of there. And then Wash comes in and he has 2. Summertime. So this spring will determine how much is drained out of this, while also the longevity of the paper unwinding massacre that's taking place with those 377 future paper silvers for one physical is still unwinding. So with that being the case, don't be surprised if tomorrow the Crimex opens and they find a way to take us down to, say, 65. So between 70 to 65 could be tomorrow at 11 a.m. tomorrow-ish. We open up, they could take us down. But then again, once again, like I always say, that's just for them. That's not really for us. And a good way of saying it's not just for us is because however and wherever you get your physical from, the mediators between the papers and what you get in your hands are coin dealers and online dealers. And as I mentioned several times before, they have been accumulating and purchasing at much higher prices so that they can have inventory. So they're not going to let things go any lower than what they would stand to lose on what they purchased. It's all about revenue for these companies and businesses. They have to keep the lights on. So they're going to charge more via premiums. So like I just said, a good way of looking at that is just look no further than what you pay when you check out if you get a chance to. So just a moment ago, I showed you guys it was 90.55, and when I first started streaming, it was 80, 83, $88, where that $90 is at. And so literally premiums will increase. So that is a real price. And then it's a matter of if you order in bulk, will it get delivered to you? Those are some things that we would probably have to talk about. So we got the Genius Act, the one big beautiful bill. That's what it is. Okay. I appreciate you for that one. I forgot to check back at the chat. One big beautiful bill, Genius Act. Okay. CARES Act. Okay, we got more. Okay. And of course, I'm not even going to talk about the Epstein stuff because that's just a waste of your time. It's a waste of your time. Listen to me. Please don't get caught up in this Epstein stuff because you have to ask yourself a question. With all this stuff happening right now, when it comes to silver, at the heart of the financial monetary system, what better time to divert attention and to distract the masses other than to drop some bombshells? And like I always say, they can give you all the names. Everybody that they've mentioned thus far that I've seen are people that we already knew about or suspected. And until there's somebody in handcuffs on national television for being associated with child trafficking and or anything of that like, this is just smoke and mirrors. It's just something to keep you busy and keep the algorithms locked and loaded. So here's another good thing. Check your algorithms. Wherever you're streaming at, the powers that be also are the big companies. Mind you, a lot of this activity came out of the World Economic Forum's Davos meeting. Once they left Davos a week and a half ago, that's when stuff hit the fan. That same week, at the end of the week, is when we had the metal drawdown. So think about this. Davos ended Tuesday, Wednesday. All the bankers, all the public-private partnerships got together. They had their meeting. They concluded. They came together on what their strategy, what their plans are towards working towards the one world government, which is still in play. And sure enough, behold, we had a silver slam down like we never seen before, triggered by China, followed up by the U.S., and then all the other things. And then we get the Epstein files. And so you ask yourself a question, what's next week? Let me share something that I believe is probable, not necessarily a given, but I know the powers that be would love to give you more distractions and diversion tactics. That's what I call them. So as of now, this is what's happening right now. So you may not have heard about this either, but here I am to tell you. 3 U.S. warships dispatched to Haiti as part of campaign against drug traffickers. So once again, we took Venezuela. We want to buy Greenland. We're going to go rescue the Haitian people. That's what I was going to point out too. And Haiti's been a complete crap show since Bill Clinton's era, and everybody that's been involved with that at that level since, on purpose. They've ruined wherever the bankers go for real world assets, cotton, oil, all the natural resources in Haiti has been stolen and left the people with nothing but drugs and guns. And the drugs and guns is what they're sending 3 U.S. ships there to stop. But the drugs and the guns originated with U.S. consent. Okay. So this is another thing that's coming soon. We're going to hear more about this. We got to go free to Haitian people. But let me give you the real one that will really kickstart everything that we don't want to happen. It will be surrounding. Let me see. I got it here. Give me a second. These are things just come to mind as I try to lay out a framework for the distractions and diversion tactics. Here we have U.S. carrier shoots down Iranian drone as tensions escalate and diplomatic talks hit a snag. So literally, this came out 11 hours ago. So you know what the military industrial complex wants. They want war. War is profitable for those on both sides. So Iran is still going to be a hot topic amongst all the other things. So pick your poison. What interests you the most? You'll find a cause. You'll find something. But none of it has anything to do with bearing good fruit. And literally, that's what I've been on from the spiritual side of things. Even the subject matter here is irrelevant, but it gives me a chance to share my faith, which is a way of sharing the good news, which is seed that is sown, which can impact lives. Because ultimately, at the end of the day, the human soul is the greatest commodity on this earth to God. He wants souls. He wants children to come back to his family. And that's what the message of Jesus Christ is all about. Gift of grace through faith in Christ alone. And that, my friends, is the good news of the day. All right, people. It's been an hour, man. But I had to get that in there. I had to conclude this on a good note. Get your faith up. In the name of Yeshua. All right, good people. Be blessed, be saved. That's an hour. Didn't anticipate doing this, but if you catch the replay, there's so many nuggets dropped throughout this. You can't say that this aren't things that are probable. Not, you know what I'm saying? We'll see. But anyway, if you've enjoyed hanging out with me, wherever you're watching from in the world, I don't know where you're watching from, but if you've enjoyed hanging out with me and just getting a little bit of everything today, make sure you hit that subscription button. Take this video if you're bold and courageous enough and share it with other family and friends, or send it to them on the D-Low so that they can get an alternative perspective. Because what I gave here, especially the Warren Buffett insurance policy that he has that I mentioned, people got to see that. If Uncle Warren Buffett doing it, you might want to do it too. And then also hit that bell, click all, so you'll always be notified. Hopefully, not really, but they won't do it. But it's just a way of saying hopefully they do. And of course, drop a comment if you're watching the replay. But other than that, people, I appreciate you guys, man. Thanks for blessing me with your time, presence. Hopefully you got something here. My job is just give monetary literacy, help you understand what's going on. And of course, if you're new, after this video, I'm going to put some links down below for you to go get resources as well as test your IQ, because that's crucial. Shalom.